Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So yesterday it was a bit, messy day because lots of different information we've got. So first of all, it's inflation, production inflation in Germany hits the record since 1949. So after World War II, above the 45%. So that was not really good for euro currency. It was not totally unexpected, of course, but anyway, and an opposite side, if we take a look at statistics from the United States, we see that initial claims still are dropping, and that have triggered multiple statements from the Fed members that were mostly hawkish on its nature. It's suggesting that more rate change could happen. And if you will take a look today, and the 10-year yield is moving higher. It's already 4.25, and yesterday we talked that it has reached the highest level since 2008 when its was 4.13 as a collapse of the Lehman Brothers right there. This is a monthly chart, guys. It is interestingly that if you take the history of the 10-year yield, we have the incredible inflation spiral on the 80s, when the rates have reached levels on 10-year around 16%. And if we will choose two most important reaction points, we will see that confidence stands at 625, 644. That is approximately the level of core inflation right now, except energy and food. It's approximately 6.5%. Not occasionally, Kashkari talked about the possible reaching of the 6% of the rate. He said that whatever rate will be, we will move it higher until core inflation starts dropping. The fact that Fed will not be able to reach this level, this is a different topic. But this is interesting. Currently, of course, the interest rates is overextended here. But until interest rates are climbing higher, this makes pressure on all dollar rivals, including the euro currency as well. In general, currently we have the really tough situation in the world. So those of you who read our Telegram channel, you'll know we have talked about the Bank of Japan. Yesterday, they have started emergent bond buying, but we said that it will not help them, just because of the structure of the bond market in Japan and amount of the quantitative easing that they have followed within the recent 5, maybe even longer, 5 years, maybe longer. We think that Japan might be among the first countries where the crisis, the bubble will blow. In the United Kingdom, you see this absolutely chaos, because it's unclear situation with the policy of the Minister of Finance and the Bank of England concerning the quantitative easing or quantitative tightening. This situation in government also stands under question. So the central banks do not tell us truth, and overall things that we see shows that situation is not normal. Recently, we also put the news in the Telegram that Fed and United States Treasuries call for Wall Street experts to consider possible same situation in the bond market of the United States as it stands right now in the United Kingdom bond market. They are worried that could be the miracle situation that reflects actually what we see currently in Great Britain. And the risks for that, of course, exist. So the fact that they already have called for experts to analyze these problems already tells that really stands something behind this. And last week, Janet Yellen tells that she sees the liquidity problems in the United States Treasury market, particularly in the bills initial offering, initial auctions, and they call for primary drillers to buy more treasuries to support the liquidity. The problem is where to get it. So all this stuff shows that chaos is spinning up. The crisis process is accelerating, definitely. We talked about this in the weekly report, actually. And of course, all this stuff will increase pressure on all other assets. And speaking even on the euro currency, let's take a look at the technical picture. Right here, you remember that yesterday we talked about the pullback. Well, pullback actually has happened. It was not really bad, more than enough to move stops to the break-even. But take a look what has happened recently. Market is returned back down to the previous position. Formally, we still have the bullish trend, but if you will see, as you will see from the analysis of the lower time frames, performance stands mostly bearish, and recent performance significantly increased chances of the possible appearing of the butterfly here. On the 4 time frame chart, here's market has formed the indecision and then break it down. This is not a good sign, and in general, you can see how performance of the euro currency was standing here. Every attempt to go higher immediately was sold off by the new seller step in on a minor retracement and put it down back to the confluence support. Trend has turned bearish on the 4 time frame chart, so this performance is not really good for euro currency. On the hourly chart, as you can see, the same. So here was nice rally, but market dropped back to the confluence. Well, formally, as I said, we have the bullish trend on the daily. Formally, confluence is not broken yet, but and potentially it might be some double bottom or something of that sort. So if you have the break-even positions, you maybe even could try to hold it more. But at this point, I wouldn't consider taking the new long position, and I suggest the chances, especially as here you can see sell-off here was relatively fast comparison to this downside leg. In the current circumstances, and based on the comments from the Fed recently, I suggest that it's more chances that we will get to the drop to the 9725 point support with this ABCD pattern. This support also could provide some chance to upward action, but here chances are significantly smaller just because this is not as strong as a confluence. And I explained already yesterday that since market is going just to the COP, it can't reach it, and turning down on the confluence and ability to proceed higher, this is not a good sign. There's a deep two-leg retracement on the way to the COP. Once the COP has been reached, it is more acceptable. We could accept this. But on the way, when the major target is not hit yet, this is not a good sign. So if you were washed out by some at the break-even after the return back, or you have closed position somewhere, currently at this point I suggest that it would be better to not take the new one. Let's watch him for 618 support. Here's in turn the bounce might happen, but I would suggest that chances just for minor bounce rather than for upward continuation looks better. And return back to the discussion finally of the Judd Napoli tactics to out. If you still hold the position here and you would like to see what will happen, keeping stop somewhere below the 618 level, that's great. So in this case, you could try to apply the Judd Napoli tactics. If market will complete this ABCD and hit this level, you could out of your last position on the pullback. In this case, you could get even some profit or out at the break even. So this is the way how Joe Napoli described this opportunity for trading of the confluence breakout level. But in this case, you will be sure that this level definitely has been broken. So because here, as I said, theoretical chance this market could show some action exist, although I think the chances are not really big.